Hi guys.
Hello.
Mm, the internet is good. We are waiting for like two more guys. We begin. Asif, I hope your microphone works, or maybe you have you can type your question. James as well. Just type your question in the comment section in case you have a question. Oh, YouTube takes it has a latency of like 10 seconds.
You can't record it via Jitsi and then you upload it.
GC does not record.
So how are you doing the YouTube stream?
So the YouTube stream, it automatically records and stores it. So once I'm done,
Yeah.
I can send you a link to the same live. It stores automatically.
So you're sharing your screen on YouTube?
Yes. I give you the. Oh, I can give you the link.
Sure.
You can,
Yeah.
Let's check that as well. Okay. So where is it? Let me see whether that works. No, not that one. What video you have? Check whether that works. I've sent on your phone.
Yep.
It works. And so all right. It has begun. It's been read. You have left.
You can't sleep.
So what happens to your coffee?
Do you want it?
Oh my goodness. I will overdose, but yes.
The life I want it. You want it? Go and sleep. In the middle of the day.
The life you want. Hi, welcome guys. So we can begin. Of course, this is more of a Q&A than anything else. So feel free to send your questions on the either on the comment section of the stream, or you can open your mic and just ask. Just open your mic and ask.
Yes, I have this question. Hello?
Hello?
Yes, you can hear me?
Yes, I can.
Yes. My question is this. There are times I have seen situations where when the price is coming into an engulfing, you see like what you have on the screen, you have a very big engulfing right there.
You mean an imbalance?
Yes, an imbalance. Sorry. Yes, an imbalance. Sorry.
Yeah.
You find the price creating engulfings as it is coming. It is going up.
Okay.
Which engulfing are you supposed to take in such an instance? Because I've seen several times where you find an engulfing at 50%, then the price moves further, creates another engulfing at 61.8, and you think that is the right one. violates that and creates another engulfing at 78 or even that 88
Yeah.
or something. When an engulfing is this wide, or when there are a number of engulfings and the structure was smooth and there was no interruption.
Okay. I'll answer by imbalance. Okay. All right. So I'm going to answer you with also referencing to the course. Remember, we talked about time frame correlation. So when you're looking at time frame correlation, we talked about the engulfing, and it said for an engulfing to be considered legitimate, then what you have is a break of structure on the lower time frame. For example, I'm going to go to the 5 minute, and I'm going to break down an engulfing that I saw yesterday. Where was this? I hope you can still hear me, James. Someone has logged off.
Yes, you are audible.
Okay, so I'm going to look at this particular engulfing. And the reason I'm looking at that or any other is I want to show you what I mean by time frame correlation and going to the lower time frame to see whether that engulfing is legitimate. Okay, so we're going to see this movement here. If I can remove all these drawing tools. I just want to focus on one, this imbalance. Okay, and then I want to focus on this engulfing right here. Okay, so if I break this one down, I'll highlight it with a yellow box.
Are you still there?
Yes, I am. Sorry about that. I don't know what has just happened, but
Okay.
okay. So if you can still hear me, let me know.
Yeah, it's clear now.
Okay. So this is the engulfing that we've just come from talking about. Okay. So you can notice this, that as this engulfing was forming, and that is why I've highlighted it, you can see that the market came from this low, bullish candle, new bullish candle above this high. So the engulfing itself is a break of structure on the 1 minute time frame. So what you're seeing is the market here was bearish, lower high, lower low, lower high, lower low, lower high, low, then a break above to a higher high. So once you have an engulfing that is a break of structure, that is a legitimate engulfing pattern. Okay. If on the other hand, you have, and I'll go back again to the 5 minute and I'll show you an engulfing that was not legitimate, and hence you find it had a failed move. Was it still yesterday? Today is Thursday. So that was on Tuesday or Wednesday.
I just want to see how it looks like on your side.
Let me see whether I can find one. Just a minute. Yes. Okay. Can't find one. But I can already see other examples. So let me just highlight the good and not the bad. So you can see here we had a break of structure here. If my screen is hanging, let me know. I'm told my screen is hanging. If you can see it, let me know, please.
Sound here.
Yeah, that's where we are.
Oh, you're still on text.
That's where we are. Can you see a blue line I've drawn?
I think the screen is has frozen.
Just a minute.
Joseph is
Let me know once you can see my screen again. Let me know if you can see my screen again. Yeah? I'm hanging.
No,
I'm good.
Not yet. Still black.
Now that is when. Just a minute. See why I hate Jitsi.
Yeah.
It has the tendency to hang.
Yeah, we're good now.
We're good?
On my end, yeah.
Okay. So we're good? So I want us to see.
You can see your cursor.
Great. So we can see here, same setup. Yeah? So we can see a nice break to the low, lower high, and a higher low here, and a higher high. So there's a break of structure. When I mean a break of structure, kindly note this. I wish you can write this down somewhere. A break of structure, a legit break of structure, what I call a clean break, and that is why I insist that you only trade clean breaks, is where if this was the highest point of the lower high, okay, that was the highest point of this lower high before the market went down again, then came up, a bullish candle forms that breaks this high, and a new candle forms that does not touch. When I talk about does not touch, I mean the wick does not come back and touch this line. Okay, we'll see something similar today on Euro USD. Okay, so it does not touch this high. So that's a clean break. With that clean break, it means the market has completely like broken above this area of resistance. So you're expecting it to come back down into what? An imbalance. So this is what you were talking about, multiple imbalances. Yeah, there is that one. You have one on down here.
Yeah, it's hung.
Oh, goodness. Internet in Kenya. Yet I have what, 50 Mbps?
Damn. We'll try hotspot for the live.
What is my speed?
Shit, that's very fast. But we're still hanging.
So why are we hanging?
Did you use Google Meet by any chance?
Google Meet has an issue of recording and live streaming. So this one, at least I know, whatever I'm doing on the chat, in case someone misses it, they'll just go to the link. I've shared the link on the group and rewatch the video. Okay. So just in case it might skip or have a delay, it will still record. Okay. So just let me know if you can see my screen again. Otherwise, I will switch to Go Meetings very soon.
You're unfrozen now, you're good.
Good?
On my end, yeah.
Okay, so we are looking at the Monday candle. Just make sure you can see it. So I'm going to scroll back to Monday on the 1 minute.
Never gonna do that. Now we're gonna straight like that.
Okay. These are the setups that I ask. You'd rather have a clean setup and finish your week in one trade. Okay, so this is the setup. Hi, Elena.
Hello.
Okay.
Hi, how are you?
So when I mean a clean break, and I mean a break of structure, and I mean a clean engulfing, this is the one that I'm talking about. So you can see on the 1 minute, higher low, lower high, lower low, lower high, higher low, then a break. So the engulfing was actually a break of structure. So once you see the engulfing is a break of structure, you are quote unquote sure of the move. Okay, you are sure of the move. Okay, so if you go to the 5 minute, say on Euro USD, there was a setup today. No, it will unfreeze.
Give it a second. Yeah.
It's because it's Jitsi, so it's waiting for the chart to load. Then it will load. Then it will send the data. So, hey, Mama, what's up? You want to drink water? Mommy is in the house. Mommy is in the house. Okay, so you should be seeing my screen right about now. Euro USD. Let me know if you can see it. Euro USD on the 5 minute.
Not yet. Still waiting for that. Yeah, it doesn't usually do this.
I think it's because we're also streaming.
I think so. We're doing something.
Because you're also streaming.
Maybe you try bundles, Safaricom. We'll see if it can be better.
No, it's not the speed of the internet. It's the app. It's the Jitsi the app.
Let me see.
It's Jitsi the app that has
the lag.
issue. Yeah. So I've reshared the screen again. No, this I'll drink. Mamlina's a drink. Okay. So let me know if you can see my screen again.
Yes.
Yeah, we're good.
All right.
Yeah, it's visible.
Okay. So you can see, and that is why we didn't have a trade on EU per se today. You can see bullish move, higher high, higher low. Okay. Did not engulf. This was around 9:30. Went and formed a higher high. Then had a drop and sideways movement. So by sideways movement, I mean bearish, bullish, bearish. That is sideways movement. Went down, bearish, bullish, bearish. Sideways movement. Came back down, then went up. So we were expecting a clean break here above this high. Okay, a clean break. By a clean break, I mean bullish candle and a new bullish candle that forms that does not touch this line. But
Sorry
you can
to
see.
interrupt you right there. Can I ask a question before you move away from here?
Mm-hmm.
Where you've drawn that line for the break, why didn't you draw it lower? Like the candle that's below. Why is that the high?
Oh, okay. All right. So three candles that form. Candle number one. I'm drawing.
I think so.
Yeah.
Yeah, just sit over here.
If it's freezing for you, it's freezing for everyone. Yeah.
So you're looking at.
So candle number one.
This is 5 minutes. So yeah.
Let me just use this. Okay. So remember I talked about the structure point. What is a structure point? It's formed by the weeks. So first week is low, a high week, and a lower week. Okay. A low, a high, a lower week. So that's a structure point.
So this is now qualifies to be a high.
This qualifies to be a structure point, not a high. It's not a high or a
I think my screen is not showing anything other than it has
freezing again.
Yeah.
Maybe we log out.
Try.
Yeah.
Try. Just a minute, guys.
Turn off everything, even your phone's Wi-Fi. We see. It will help.
I promise you, it is not the internet; it is the app.
Yeah.
Yeah, the internet.
It's the app. Technology fails when it comes to uploading. All right, so just let me know when you see my screen again before I continue. I don't want you to miss these points. They are super important.
Can you maybe move your... Yeah, it's visible.
It's visible? Okay. So when I mean a structure point, okay, so just looking at the market, I'm going to highlight a couple of structure points. So that's a structure point. Okay. So you can see a week. So it's a week. There's a wick here, then a low wick, then a higher wick there. So this is a structure point. Okay. Same thing up here. There's no structure point here because it's a higher wick, and a higher wick. No structure point there. Okay. No structure point here. It's low, high, high. No structure point. So the only structure point that forms is up here. Wick, wick, wick. So it's forming something that looks like a U shape like that. Yeah. Here is a structure point there. There's a structure point here. Okay. There's a structure point there. You can start seeing them. Those are your structure points.
Okay, that is clarified. That's okay.
And again.
We are not seeing what you're explaining. It has.
Oh my goodness. Okay, let me see. No, there's no way I cannot share Zoom. It's a live. So let me try and cancel the streaming. And then now what?
Or maybe they can switch over to YouTube and ask their questions in the chat box.
No, now the YouTube.
Yeah.
Notice YouTube is has a lag. Has a lag. Can you see my screen now? It has a lag of around 10 seconds.
Okay, I see.
YouTube has a lag, a major lag. Let's see what I'm showing. It should be seen now.
Yeah, we can see.
Yeah, maybe you can repeat where you are drawing the structure points.
Okay. So what I mean by structure points is this. So this is a point. So I'm talking about the wicks. So remember parts of the candle. So the wick. The wick is that small line above and below the candle. Okay. So we are saying for a structure point, you have a wick on the left, the lowest wick, and a wick on the right. Okay. This is for a structure point that is on a bullish move or on a higher low, for example. At the top here, you have a wick on the left that is lower, at the highest wick, and a wick on the right. Okay, that's a structure point. So at times you'll find a structure point is formed by something like this. They're bearish candles, but they're forming a structure point. A wick, a high wick, and a low wick. But these are still all bearish candles. The bodies are bearish, but they have a structure point here. So what a structure point is if I highlight this and go to the lower time frame, maybe I jump to the 1 minute. Now this will lag, but it's fine. So in the 1 minute, it's actual structure. It's candles, a bullish, bearish, like there's lower low, lower high, lower low. You can see that there. But on the 5 minute, it's just 3 candles that are all bearish. Okay. So when I talk about a structure point, is a show that the market had found an area of resistance and rejected that area. Okay. It found an area of resistance there and rejected that area. So when you want to see whether the market is breaking structure, you want the candle, the market to print a candle bullish and a new candle that does not touch the structure point line. Remember, that structure point, that top of that structure point is price. It's a price line there. Okay, it's price 1.0949. Sorry, 1.09409. So you want the market to print a candle bullish and a new candle that does not touch that structure point.
Maybe you may need to maybe find a solution to this freezing screen.
Again, it's frozen.
We didn't go to the 1 minute.
Before the question okay. Disappears from my head, that top line there, you can use it as a previous area of support or resistance, or you have to use the wick, the body of the candle.
Previous area of support or resistance.
Yeah, for example, this is your gap. There was a candle that went into here, and then now we're looking for it to come and tap this area into our gap. But there's a candle here that has a wick that's there, the body is here. So it's just, where do you draw the line that shows that is the area where price is going to reverse from, or that is the area where we're going to have resistance that was previous support.
The highest point of that structure point.
The highest point of the structure point, the body of the wick or the wick itself?
The wick.
The body of the candle?
The wick.
The wick.
Yes. Work with the wick.
I've been drawing it wrong.
Work with the wick. Can you see my screen, James? Just before
Yes, I can see your cursor.
Okay. Okay. Let me send this screenshot also on the group just to like confirm what I'm saying about structure points. I think I'll do a whole document to break down structure points. Okay. It will be easier so that you can go over it over and over again. I think that will make some more sense. Is that okay with you guys?
Okay.
Yeah, I'll do a document on that so that I break it down again. So I was explaining the break of structure to answer your question in detail. So the break of structure should be, this candle should be bullish and not touch. So since it touched this line and then the next candle is a bearish candle, to me, I don't look to buy at this imbalance. The reason I don't look to buy at that imbalance is because the market is not back bullish. It's not in a bullish move. And you notice here it came into that imbalance, went back, then started going down. Okay. Why? It's because this was not a higher low. There was no higher low to be formed here based on the break of structure, because there was no break of structure. Okay. Unlike, I'm going to use now the next example. What is this? What are these threads that I'm getting? Let's go back to. So I'm going to scroll, then pause for a minute so that you can see what I want to explain. This is your USD. Okay, yes. Yeah, this is one. So I'm going to use this as an example of a break of structure. So let me know once you're seeing a yellow box.
It's visible.
Okay, great. So this is now a different perspective now on a break of structure that is bearish. You can see a push bullish to a higher low here, high, then a break. By break, I mean for a bearish pattern, this is the structure point. So it forms a bearish candle and a new bearish candle below it. That's a break of structure. Okay, that's a break of structure now. So now you're waiting for that engulfing candle. For here, it didn't form because it was way past time, but that's what you want to see when you have a clean break of structure. You'd rather trade those than trade structure that is not clear. Okay.
So, for example, let me ask a question. If this bullish candle was engulfed by another bearish candle, like down here, that would have been valid?
Yes.
Okay. All right.
Okay. So we've identified that. I hope, James, I've answered your questions. You've identified how to know when the engulfing candle is legitimate. You go to the lower time frame, just check whether it has broken structure on that 1 minute. For example, if you're trading the 5 minute.
So what you're saying is, first of all, on 5 minutes, the break should be like this.
Yes.
So that you wait for an engulfing in one of these imbalances.
Yes.
And then when an engulfing forms, you go to a lower time frame to find another break of structure. Is that what you're saying?
Yes.
So breaks of structure here are two. The first one is on the time frame you are waiting for. That is the 5 minutes. And then when you see an engulfing, you see here there are two imbalances. Three actually.
Yeah. There are three.
So if it forms here, I should now go down to check whether it is a true break of structure on 1 minute.
Exactly.
That's what I'm saying.
Exactly.
Oh, okay. Because something happened on gold, I think today, and it went creating engulfings, so like that.
Ah, okay. Yeah, I saw it. Let me open gold. I saw it. This is what you mean. So let me know once you see it.
Let's be patient with the Jitsi.
Yeah. Yeah. But let me know if you can see gold. The 5 minutes.
Yeah, we can see it now.
Okay. So, yes, this is what happened on gold. So the first engulfing formed at 9:55, this candle. The second one formed here. The third one formed here. And the fourth one formed here. Now, this was a good scenario where I can break it down and tell you how many of these were legit engulfings. I'm just going to highlight all of them.
So for you to have an excellent entry, as you're watching your area and it looks like it's going to engulf, go down to the 1 minute and wait for that break of structure. When that break of structure happens and will engulf in 5 minutes, and buy.
Yeah.
Got it.
That increases your win rate.
Okay.
That increases your win rate.
Let me just be quick. Well, what he's saying for you to identify if the engulfing is valid or not is that you go to 1 minute and you see if it has broken structure. So yeah, when you're on 5 minutes and you're waiting for that candle to engulf, and you also go down to 1 minute and wait for that broken structure.
Exactly.
All right.
So James, from what you've learned so far, I've highlighted all four candles. So this was the first one, 9:55. So let me make sure that this is at the exact time. So 9:55, 56, 57, 58. Okay, this is the first engulfing on the 5 minute. Second engulfing on the second engulfing here, third engulfing here, and the fourth engulfing here. Does any of them have a clean break or a break of structure?
Okay, from what I'm seeing, none.
None, exactly.
None, because the first one is the one that almost, but it wasn't.
Yeah. Second one?
The second one, all of those came back in. After the line, you see the line break. The line break, where you have drawn that line above the wick. The third one is a terrible one. That one is not even, can't be considered.
Exactly.
The fourth one, you can see the first bearish came just inside again, and there wasn't anything above that you can call a candle that is going. There's no clean break. You see, you said clean break is where a candle goes above and does not come back in, right?
Yeah. So I want you to notice the fourth one. The fourth one had a break. I don't know if you can see that. The fourth one had a break.
Oh yeah, the fourth one had a break. If I can take my eye as well.
Yes.
Because when you draw that line, it goes where there is that small bullish candle. Exactly. And then the bigger one went above, did not come back in. So that one was a clean break. Yeah, I've seen it.
Great. So Even I was in that buy.
That there.
That particular one. Now, this is also a lesson. It's a good one. This is the reason I monitor my trades on the 5, and I do not limit myself to the 1 minute. Okay. Now, first thing you'll notice is even as these candles were forming, on the 5 minute, you have a consolidation, or rather a ranging market. Yeah. What is a ranging market? Bullish candle, bearish, bullish, bearish, bullish, bearish. So you'll see that on the 5 minute. I'll switch back. I've not switched back, but I'll switch back on the 5 minute. Okay. So you can see bullish, bearish, which means the market is in a consolidation. I always tell everyone that trades, even on the best trading methods in the world, you will have a down day, okay, where everything lines up, but the market does not move in your direction, and it is okay. Okay, so here, because you're an Adesal trader, you will see this, that the market did actually break. Yeah, so that engulfing itself was a legit engulfing. Okay, but after which it went up, then broke structure bearish. Now, can you see this? I'm going to highlight the same structure point and extend it. So can you see that? It broke again structure bearish. Bearish candle, new bearish candle formed here.
And if you're in the trade, you exit.
Exactly.
Okay. No other confirmation needed.
Exactly.
This is 1 minute. You just exit.
When I tell you to always monitor your trades, is because something like this will happen. You've only risked 1% or 0.5% of your account. It's no big deal. But when such a thing happens, it's always good to start mitigating your risk, or even change your bias. Because now in this scenario, the market formed a lower low, came back up into this imbalance. And you will see that it's so clear, it hurts.
Came back right into that imbalance and now dropped, engulfed. Ooh, this is a trade.
Maybe you can wait a bit so that the screen loads.
Just
okay, no problem. So let me know once it loads. Let me know once it loads.
That's today, isn't it?
Yes, that's today. It was at 11:17. Okay, so let me know once it loads. You guys can see it.
Move your cursor. Still static.
Yeah, that's funny stories.
So we should rely mostly on TradingView.
Yes, work on TradingView because and you'll notice by the end of the day it will have formed an engulfing.
Really? So they're just fucking with us.
Yes, they do. They do that so many times.
Okay. And he's been telling me to use TradingView for the last 5 years.
Okay, let me know if you can see the screen again.
Yes, we can see it. You can go back to where you had drawn. What you are saying is the candle closed below. It formed a break and a clean one. That was actually that was a clean break.
Yes,
downwards. Now this is the issue I have. At what point do you exit? When that candle closes below the first one?
No, the second one.
Okay, because that was a clean break.
Yeah, the second one. And then because you're Adesal traders, you know this, that the market can come into this high. Yeah, it can come into that high, find resistance, and change direction. Okay, it can come into this high, exactly what it did, change direction. Okay, so you're just monitoring your trades, and you place your trade based on your understanding of what the market is doing. Okay, but there are times you will have a negative day, and it is fine. Okay, it is fine. But for the most part, this increases your win rate. Just understanding that the engulfing is followed by, as in the engulfing should be a break of structure before you enter. Okay, just write that somewhere. Make sure you are able to backtest that and see how many times does this actually work as compared to the number of times that it doesn't.
Yeah, that one is, to me, it's new information, and it's critical. I have come to realize with time, it's better you just enter even one trade in a week than looking for trades in London, New York, London, New York, you know?
Exactly. I've been telling that to everyone, that you just need one trade, particularly one trade a week with a good account. You should be more comfortable, you know, because if you overtrade as well, it also leads to a lot of frustration. Okay. So that is what happened today. And it will happen in the markets at times that you'll enter a trade, does not go your way. It was, everything had lined up, you know. This is when Joe says all the stars aligned. But even when the stars aligned, the market still did not go your way, and it is okay. Yeah, it is okay. All right.
Yeah, so my question has been answered, and I think it has brought light to a lot of things I think some of us didn't know.
Yeah, and that is why webinars are important, because some of these things, if I teach you in one class, it will be overwhelming. So you want to, as you grow, you learn. I also learn every day. I'm still learning. So overall, you can notice gold was still bullish, and it has still gone up. So it has hit the targets that we wanted to see hit, but yeah, it was just a sideways day for the morning, and then is now going to our direction. Okay.
I have another question. The next question. Sorry if I'm interrupting someone. My question was, I have been having this question all along. If you check these engulfings, where we are now, you can see the engulfing that formed at 50%. The bodies of those two candles were right on 50%. Assume this is a very nice structure where this is happening at. You can go and see now the one that happened around 61.8. That engulfing. You can see the bodies are not somewhere. Where is it? Are you able to expand a bit? I'm having a very small screen. I hope it won't lag, so that I deliver my question fast and we can give others time. So you can see the one that happened around level 61. The one that has a, we call it a doji sort of. Not the left. Bullish engulfings. The engulfings that were tricking us to get into the market. The second one from left. The second one from left.
This one here.
From left. Yes, it happened around 61. Then the other one happened between 61 and 78. Then the fourth one happened below 61.8. So this is now my question. You can see the bodies, like the first one, the body is right on 50. The other one, you can say it's nowhere, it's just around 60. The third one is an island. The wick went to 78. The body of the bullish was somewhere between 70. So where do you, in these scenarios, like this one you have pointed, where do you consider, has it been pushed from 78 or 61? Because you see now the importance is where do you place your TP? Because if the wick has gone to 78, the bodies are on 61, do you target 27 or do you target 61? You understand what I'm saying?
Yeah, I understand. So, one, consider the low of the engulfing pattern. For example, in this case, this is the low of the engulfing pattern, the 78. So it came to the 78 and bounced off. That's what you consider. Okay. And then because the 61 and the 23 are the only ones that have a target of negative 61, usually negative 27 is your first take profit, and that is where you should close majority of your trade. When I say majority, I mean if you are trading and had put one lot, then 0.8 lots are closed here. You've taken 80% of the money that has already been put into your account. And then you let the other one go to the negative 61. This is because unless you are trading a very strong trend, usually the negative 27 is the ultimate. Why? Because remember, I mentioned this, above the higher highs, there is liquidity. The negative 27 is just above that high. So this is where most liquidity is at. That is where you close, and immediately after you notice something like this, the market reverses aggressively against your order. Okay. When you are in a strong trend, by strong trend, I mean what we were having yesterday. A strong trend. Okay. When you're in a strong trend where the market is aggressively forming lower highs and lower lows, lower highs and lower lows, then you can hold to the negative 61. But I kindly advise that if you get to negative 27, close a majority of your trade. So I hope I've answered you.
Yes, you have answered that perfectly, because you see what is happening right now, where you have just come from.
Yeah.
In case there are situations that are like this, where it has bounced off, where I think it is 61.8, but it just goes slightly above 27 and goes back to break even.
Yeah.
And it's like I didn't have a trade that day, which
exactly.
is, and you see it had gone to 27 and slightly above.
Yeah.
So it becomes very frustrating. So that is why I was saying, what wrong thing am I doing?
I understand. And especially during the season, it's called the switch over. So we are switching over in financial year. So we are just entered the new financial year. So usually you'll find trades that are not getting to take profit. You'll find they're getting to the 100 level or the 0 level, then they reverse back to your entry, and then now they go back to your take profit. It's because there's a lot of consolidation happening in the markets, usually around this time. Okay. From September all the way to December, mid-December, the market is usually in a nice trend. If it's bullish, it's bullish. If it's bearish, it's bearish. So you find easy setups during that time than it is during this time. For the guys that were trading with us even last year, around July, they can attest to how tough it was to trade during this time. But you can notice now the market is back to session, back to moving in directions. Like you can easily find a higher low and catch the move to a higher high, and vice versa. Okay.
Okay. I think the other question I had is the same that was asked by Asif. But I think you already had said that would be a session on its own.
Yeah. Let me see whether I can find that question. The question on psychology. No, between reversal and trend continuation. Yeah.
Yes, that's the issue. Because sometimes you find like you start now wondering whether, the minute you're trying to look for reversals, it makes you feel like you are trying to force the market to show you what you want it to show you. And then when you are trading continuation, you feel like you are trying to you are now like, what do you call it? Like you are entering to chase the move. You wonder, where now do you buy? Are you forcing the market to reverse, or are you now trying to chase the move?
I understand. And yeah, I think then that needs a session. Let's do tomorrow is Friday. Yeah, we can do tomorrow's session. We'll do another webinar tomorrow and talk about trend. Same time, 1 to 2 p.m. I think we can do that. If you guys are okay with it.
It's all right.
Yeah, it's okay. I think around this time, it's better, because in the evenings I'm usually not around, and I'm also maybe tired.
Yeah,
so
story of everyone's life.
to
Yeah. We understand. So I'll make time tomorrow 1 to 2. We can do that even for the next 1 week, just going over the questions that people have, just to make sure things are clear. Yeah.
All right.
Anyone else with a different question?
Not different, just a question in regard to if you go to 1 minute, or if you just stay on 5 minutes for gold.
Or gold?
Yeah, 5 minutes for gold. So where this engulfing happened, if you look at gold, it was not an engulfing on 5 minutes, but it is on 1 minute. So what do you do in that sense? Because let me remove this.
Oh, the one that broke structure bearish.
Yes, this one that broke structure bearish. If you go to 5 minutes, there's really nothing there that would make you want to go in that move.
Yeah. So here. Okay, I don't know whether you guys have had that question, but I'll answer it like this. So every time frame has structure, whether it's bullish, bearish, or ranging. Every time frame has structure. So if you were busy trading the 1 minute, maybe that was the only setup you found.
Yeah.
On the 1 minute. But on the 5 minute, we particularly found a setup that didn't give us profit.
Yes.
Okay. And then you'll find someone who traded the 15 minute found a setup on that particular day, particularly maybe this one. Okay. So depending on the time frame you're trading, you have to accept your time frame. If you're going to trade the 15 minute, then work with 15 minutes. The moment you shift up and down without confirmation from a higher time frame, it becomes problematic.
So okay. This will have not been a trade that's advisable to take.
Yes. No, the thing is, if you are trading the 1 minute, for example, because the market is in consolidation, you tell yourself you're going to trade the 1 minute.
Yes.
Then that was a setup on the 1 minute. It is legit and it made money.
Yes.
Yeah. Yes. But if you are on the 5 minute and the setup comes and takes you out, it is also okay, because every time frame has one structure, two has opportunities, and they still have probabilities. So if you're trading the 5 minute, it has setups and has probabilities. One will go your way, one will not.
So you don't recommend if you're usually trading the 5 minute and then you go down to the 1 minute and find an entry, you don't recommend taking that entry.
Let the 5 minute confirm first.
Okay.
I'll explain how yesterday's Nasdaq trade was. Let me go to Nasdaq and explain that. Okay. Yeah. No problem. At least we're recording. Okay, so I'll go to Nasdaq and explain the sell that we took up here.
So yes, there's something you had said you are seeing on Nasdaq, but I didn't seem to understand.
Okay. I'll show you that. It's the same thing we've talked about today, but I'll show you that. Okay, so Nasdaq has, first things first is it formed a high. Okay, so remember we've talked about this. Above the highs are liquidity points. Okay, and then if you go to the higher time frame, say the 4 hour, I don't want to switch over, but just take some time to go over Nasdaq on the 4 hour. There was what you call an imbalance here, or a gap. Okay, so I don't know whether you can see this gap.
Yeah, that huge ass gap, yes.
Okay, so in this gap, there is liquidity. Notice market comes up, gets there, drops. Comes back in again, gets there, drops. Comes back in again, gets there, drops. Okay, but what it is doing is forming a consolidation over time. So it's higher highs, lower lows, higher highs, low, higher high, low. So what happens in such a scenario is the market will trick people. So these are things that you learn over time. Okay, the market will trick people into entering bullish moves, but you're still within that imbalance. So it will trick people. So what did it do? Trick people. It was going up. Okay, then immediately after dipped back in, and this kind of setup, and I told you this, it happens between 4:30 and around 6 p.m. is Nasdaq will do that every day. So we'll see that even today. It will try and take out liquidity on one side, then completely break structure and move to the opposite direction. So this is what happened yesterday.
1 minute.
So we've talked about clean breaks. Now I know you know what clean breaks are.
Yes.
Okay. So this is the first.
Maybe we can wait for the screen.
Okay. Okay. Sorry about that. So let me know once you see it. I do not want to lose anyone in this. All right. So are you seeing the screen? Let me know if you are. If not, I can.
The screen is visible, but it's static a bit. So
okay.
Are you able to move the cursor?
Can you see? Okay. So if you can see my screen and my cursor going around, let me know.
Yes. Yes.
Great. So you can see this. So the market was from 4:30. So I'm looking at 4:30. Why? It's because a lot of news. Remember, Nasdaq is a commodity, and it is an average of how the main companies in the US are performing. Okay, the top 100 companies. So what you find is at 4:30 there's a lot of news. 4:30 Kenyan time, which is 9:30 New York time. There's a lot of news that drops. So you wait for 4:30. Then you wait for the market to take out a liquidity. So liquidity could be a major high on the left. Okay, so I just marked that out with this black line. Okay, so it came up. So all you're waiting for, because it has taken the liquidity on the top side, you're waiting for a break of structure, a clean break of structure. So that happened bearish. So
bearish,
yeah. So you can see no break of structure here. High, low, lower high, then a clean break. You can see this clean break here.
Yes.
Okay. On the 1 minute, let me say this right now so that we hear it from me. Your stop loss is always at the top here, 120%. So if I print the fib on the 1 minute, remember you're now on the smallest time frame. So anything can happen on the smallest time frame. So your stop loss, based on this break, your entry is a pending order. You're not waiting for an engulfing candle. 1 minute engulfing candles are no big deal, especially on indices. Your stop loss is at the 120. It's above here.
Interesting.
74 pips, yeah?
Mm-hmm.
And then, what are you targeting? Opposing liquidity. So where is the opposing liquidity? Someone tell me. Where is the opposing liquidity? Great. So the opposing liquidity is at the bottom, is at the lowest point of that day. Okay. So that day, the lowest point of this day was here. It was the London low.
Yeah.
Okay.
Maybe you can move a bit slowly. The screen has not loaded.
Okay.
It only loaded the short position without extension.
The short position. Okay. Okay. So you have seen a break of structure. You have seen a break of structure on the higher time frame. Oh, sorry, on the 1 minute after it took liquidity. You put your entry at the imbalance. Your stop loss is at the 120 level. Okay. And then you're targeting opposing liquidity. Now, opposing liquidity does not mean that you have to wait for the market to go the full 1,000 pips plus. No. Opposing liquidity can be any higher low or any structure point that was formed during that day. Let me mention that. Yes. Okay. So let me know when you can see my screen before I can continue.
The screen is okay now.
Great.
What about this?
Yes. Yes, even that can be a target because this one is a 1 hour.
So would you recommend if it gets to this place, you put your SL up here as it continues to drop? And then as it forms lower lows, you keep on moving SL.
That is what I wanted to explain. Okay. So when I say opposing liquidity, any structure point as the market was going up, any structure point can be an area where liquidity is. Okay, so a structure point is what? The higher lows that you're seeing as the market is going up. Okay, so what are you doing? You're targeting any of them, or if you're going to hold on a trade, you're looking at structure as it is going down. So I've found my entry on the 1 minute. I switch back to the 5. The reason I'm switching back to the 5 is I want to see less noise on my chart. Okay, I want to see less noise on my chart. So this is our entry. I've already put that there. Let me know once you see it so that I don't leave you. I'm back on the 5 minutes, so make sure you can see the 5 minute on my chart before I continue.
The 5 minutes is visible, but maybe you can move the cursor.
Can you see my cursor?
Not yet.
This is YouTube.
No.
Yeah, it's good.
So if you can see my cursor going around, let me know.
Can you use this for a second? She's having issues with the touchpad.
Okay, she doesn't see that.
Okay.
Yeah, whatever document. Itakuwa fired.
Put this far away.
Before we have
Okay, so can you see my...
Still not yet, but I also had an issue. There's something you have mentioned about setting limits. I think we'll go back there sometime.
Okay.
Yeah.
Okay. Okay.
The cursor is still not there. I don't know.
I'll reshare the screen again. Yeah, good. Then should be back. I've reshared the screen again.
It's okay now. It's okay.
Good. So I've said our target is opposing liquidity. So all the structure points that you're seeing as the market is going up, there is liquidity below them. Okay. So my target for yesterday was this, the lowest point that the market had been for the day. Okay. So as the market is going down, you're just moving your stop loss. Okay. So the market came down, came back up, formed a lower low, a lower high, a lower low, a lower high there, from the lower low. So as it is going down, I'm moving my stop loss above this structure point. Okay. So if you notice, and if you've interacted with your trading platforms, you can actually move your stop loss into profit. In that, if the market reverses, it will hit your stop loss, but your stop loss will leave you with profits in your account. Okay. So as it goes down, lower low, from the lower high, goes down to a lower low, I move my stop loss from this high to that low. Okay. Wait for it to come from a lower high, from a lower low. For me, it took me out here. That was my exit. There.
Well, that's where your lower low was.
Yes. That's my... Because I should have waited longer, but it was 10 p.m. and I was tired.
Oh.
Yeah. But you can see...
It should have been here, isn't it?
No. Lower high. Lower high.
It should have... Oh,
then lower low, lower high here, lower low. Or here it didn't form a lower low. So my stop loss should have been up here, but I was tired. So I squeezed it, took me out, then continued to go down.
Okay, I see that. I see that. But this would have convinced anyone to just like put the lower low.
Exactly.
To put the SL there. Yeah.
So my particular stop loss should have been here. But who was waiting until 1 a.m.?
Yeah, nobody. I'm asleep.
Okay. So, and particularly it had taken out this. So I was very comfortable squeezing it.
Yeah. It's already got into your take profit actually. Yeah. If you had actually just left it and not even moved your SL, you just came and hit your take profit, you're done. Done for the day.
Yeah. So I hope
this is really
that
good
makes sense.
That's fine. Shite.
If
you want a full percentile in 100.
So what you've said basically about NAS is from 4:30 p.m. our time.
Yes.
Or 9:30 New York time. You wait for liquidity to be taken out.
Yes.
But at least you have known the liquidity you want to be taken out. So you are there now on 1 minute.
Once the market takes out your liquidity,
yeah,
you go to the 1 minute.
Okay.
And then you wait for a clean break. Okay. Remember that it has to be a clean break. Yes. And we'll do that today. At 2:30, I'll do a live on Jitsi. And we'll try and find a setup. Yeah.
Okay. So at least we'll be on to see what is going on.
Exactly. Okay. So unless anyone else has a question.
What have you said about setting limits?
Okay. So what platform are you using?
TradingView. I analyze on TradingView.
No. See, for a limit.
No, MT5. MT5.
MT5. Okay. Yeah. So for MT5, if you right click on the screen, maybe let me see if I can be able to share the MT5 here.
Okay. I meant my question was after the break of structure, where are you setting your limits? Immediately
in the imbalance,
or in the imbalance, and then your stop loss should be at 120.
At 120.
Yeah, there's a day I saw your fib having the 120 and 110, I think 120, and that's another question I had. Like, what's the essence of having the 100, 120 if I'm not taking my trade there?
Okay. So yeah, the 110 and the 120, it's in the video, but I'll explain it again. So the 110 and 120 mean that the market has broken structure. If I am to draw my structure like that, okay, if I'm in a bearish market, this is my structure. All right. So from the lower high to the lower low, and then I mark with my fib from the lower high, the lower low. What happens if the market comes all the way above this high?
Oh, you're waiting for him?
Yes, I'm waiting for someone to answer that. What happens if the market comes up and breaks above this previous lower high?
Unless it's a clean break of structure, you should still maintain your bias. No?
No. Don't complicate. Simple. What happens if the market breaks above this?
It has a broken structure.
Yes.
And change something.
Yes. Broken structure?
Yes, it is a broken structure. So what that means is, if the market goes above...
Even if it is with wicks?
That's the thing. Unless the market is... That particular pair is very... I'll not call it volatile. But yes, let me use that word. Unless it is very volatile, usually and rarely will it come and take out, like wick you out. There's that idea called wicking out. Okay, it rarely will. Okay, but if it does, then you obviously know you're either in a consolidation that is just about to start happening. Yeah, you're expecting the market will now start maybe doing this. Okay, or it wants to break structure. It will continue going higher because it has started to break above this area. Okay, and you'll see that enough times. You'll see that enough times. Even when I explain the engulfing candle and how when you go to the lower time frame in the engulfing candle, you should see a clean break of structure. Notice that you usually put your stop loss on the 5 minute. Okay, say this is the entry. Let's assume this is the entry you entered. Yeah, this engulfing candle here. Let's assume this is the entry that you are entering. If you notice, I always say, if you enter here, where is your stop loss?
Right above.
Above there. What does that mean?
Above the wick.
Exactly. What does that mean? If I'm on the lower time frame, if on the 1 minute, and this is a clean break of structure bearish, where is my stop loss in that scenario?
In the zones of 110, 120.
Exactly. So it's the same thing.
These webinars are important.
No. Draw the one. Draw the fib on the 1 minute so I can see that.
Great. No, that's a good one.
Yeah.
Let me see whether I can zoom back into 1 minute on that. Okay. Let's zoom in. Let me know once you can be able to see the 1 minute.
Yeah, we can see the screen moving, the cursor moving.
Great. This one for this one you can't even see the breakout structure, but it's fine. It's okay to use it. Okay.
Because on 5 minutes, anyways.
No, because this was Nasdaq, for example. This is Nasdaq, yeah.
Okay.
So this is this is not a good example. Let me
I
go
think
back
what
to
you're
the same.
having here is a hypothetical situation.
Yes,
on
it's
that
hypothetical.
one.
Yes, but let me go to the gold one that we talked about today. My goodness, it has flown to the moon. So this is the setup that we were talking about.
Yep.
So
1 minute from there.
Go to the 1 minute.
Yep.
Yeah. So notice. Let me know when you see my screen.
But it's interesting because gold likes to wick a lot. So I wouldn't place my notes here. I'd place it like above here.
Yeah, but still.
It should be here.
Still.
If you draw your fib here, this is the 110 level.
No, the 110 will be above here.
Which is where you should be.
Yes. So can you see my screen on the 1 minute?
Yes, it's visible. Move your cursor, please. Yes, it's visible.
Great. So we were talking about this engulfing. Though it didn't go away, it's always good to just analyze it. Okay. So if I measure my fib using this one and extend it like that. Okay. So I'm measuring from this low to this higher high before the market came back down and continued going up before the whole break of structure. Yeah. So based on my entry, if my entry was after this candle closed, my stop loss was below here. Sorry, 120. My stop loss was below there. Okay. And then my target was, because it is the 61 or 78, my target was there, for example. Okay. So it's the same concept. If I go to the 5 minute, my stop loss is just below the pattern low, bearish bullish candle, the pattern low. That's where my stop loss is. And my target is based on the 5 minute take profit level.
Yeah.
Exactly.
It makes a lot of sense. It reached a point I removed those 110, 120s. But now it makes a lot of sense. It's good to know the sense behind something.
Exactly.
These are candlesticks and it looks so abstract, but when you know the sense behind something, you are even comfortable applying.
Yes. So gold was particularly supposed to go very much higher. That was a good trade. It's only that didn't go away, and it's fine.
Yeah.
It's not even time to trade.
Yeah.
Then we have other situations. Hello.
Yes.
We have other situations where there are two things I have seen you do in some of the images you share. One is a situation where you took an entry not based on an engulfing, but based on the area being a previous area of maybe support or resistance.
Yeah.
Secondly, I saw you take an entry based on an engulfing that was there previously. So there was an engulfing in that zone, but it is a previous engulfing. But an entry has come around the same zone and you take an entry. Those are two situations I have noticed from some of the images you have shared.
I wish you could show me one example. Because it would be easier to explain every setup. I'm looking for one in the screenshots that I've shared so far.
Unfortunately, my WhatsApp does not go way back.
No problem, no problem. But that's the whole. So the whole idea is one, the concepts that I have shared with you guys are the concepts that I use every day. Okay, it's either an area of imbalance or an area of support. And then on top of that is I have allowed you guys to see even the other concepts that I am using, because growth is slow. Okay, if I teach you everything, it becomes difficult to apply one, because all you need is one method. You don't need all of them. All you need is one method. Okay, yeah. So that's why I might not be able to explain some concept. It's this fairly around the same thing. It's either an area of support, an area of resistance, an area of an imbalance, an engulfing candle. Why? The engulfing candle just shows a break of structure. Okay, and that structure, once that structure has broken, it is confirming the major move. Yeah, the confluence. What is your not the confluence, but the main direction? Where is the market going? So when you know where the market is going, you're able to take advantage of a move once it starts to play out. Okay, but the beauty about it is the journey is continuous. We are still learning.
Yeah, it's a very long journey, and I think one of the mistakes people do, and I've come to see it's a very big mistake. And I think you have met this as a mentor. Someone comes into Forex, they make a few losses, then they go away for maybe 6 months or a year. They come back.
Yeah,
I think that is a very big mistake, because this is an area where you need incremental knowledge. You don't have breaks, like you go, then come back. You come to start from zero again when you come back.
Yes. And also the second thing is switching strategies. So right now you've learned how to read market structure. You know where to enter, where to exit, where to put your stop loss, and you have an edge in the market. Then someone comes from Adesal and goes and joins SMT, and they learn smart money concepts. They start trading supply and demand. It's a whole different concept. And then that messes them up. And they switch over and do another thing. So over time, you have what you call analysis paralysis. So it's very frustrating if you have no guidance. That is why Adesal started, because there was no guidance. Someone who will sit with you and tell you, no, this is how you're supposed to do it over and over again until it sticks. Yeah, so that is why we are still doing webinars every other week.
Yeah, and I think this is just a suggestion now that we'll be having regular webinars. Is it possible, like we have a webinar, maybe at the end of the week, whereby you see there are certain things there are certain setups you have taken all along the week.
Yeah.
Maybe you pick 2 or 3. Now this is historic. You pick 2 or 3 where you come and explain what you are looking for and how you took that trade. Because in the process, someone is going to learn something or ask a question that is going to help everyone else.
Yes.
Instead of, you see, there is also the risk. I understand. There's a time I had suggested this, but there was the risk you said of feeling like you are spoon feeding people when it is a real market structure happening, and you tell us to join and you see how you are doing it.
Yeah.
There is a risk of people getting lazy, and I understood that point. So I'm flipping it the other way. Like you have taken, you see now there is a screenshot you gave us of the losses and profits you have made.
Yeah.
I don't know whether you went and analyzed some of the losses you made and the profits you made.
Yes, I did.
And some of the, I know you came to realize some interesting things you found.
Yeah.
So that is what I'm talking about. Like we recap like some of the things you did, some of the things you uncovered. Yeah, based on how the market played that week, on very specific terms.
I understand.
Yeah.
And that's particularly what we are supposed to be doing in webinars. Some of them I will be recording just to go over the setups that I've taken, and then others will be question and answer kinds of webinars where, like questions like this one now. It's a question and answer. You ask a question based on what you're seeing or observing, then you go over it, and then you have come out of there having understood more than you had understood before. So I'll do both because I feel it is important.
Yeah, it is important because what you have said today, I don't know who else knew, but I didn't know what you are going to 1 minute to get from there.
Yeah.
Like to make sure like this engulfing is legit. I didn't know like the diagnosis to getting that.
Yeah. And I understand because these things you have to learn how to crawl before you can walk. So crawling is and identifying the engulfing, then walking is breaking it down. And then once you are walking, then you can fly. You can know how to scale into your positions.
Yes.
These levels. Yeah. So I understand, and I'm going to make sure I do that. It's for you guys' own good, so it's good as well.
Yeah, something else. I was analyzing that image you sent. This is just by the way. And I was checking the entries you are entering based on time. And I could see you have taken a buy, you have taken a sell, you have taken a buy. So I didn't understand like how the market was playing out around that time. So
that
you take a sell, and then within a very short time you have taken another buy.
Yeah, it's a consolidation. So this is the screenshot.
Then there was another. Sorry.
This is GU at 10, 12. Yeah. So look at the date. So look at the dates on those screenshots, and then also look at the times. Where is this? This is last week. Yeah. So GU and EU were on major consolidations. So I was finding setups like the one we've talked about today in gold. So similar setups are happening now on the 5 minute. And then there's something called mitigation. So mitigation is a whole other approach. So you're in a trade. It starts to take you out, and then when you go to the lower time frame, you notice a change in structure, but the overall bias has not changed. So what you do, you take it's quote unquote a reverse trade. Yeah, some companies call it martingale. You're taking a reverse trade to catch a small move before the main move goes. Okay. So sometimes you apply that. It's rare, but there are times, especially when the market is consolidating after you've entered a buy, maybe you're in a buy, then it breaks structure and starts consolidating to a sell. Like the gold trade today. Let's look at the gold trade for a minute. So we've broken this down. Yeah, we've broken this down. We've seen a break of
gold is the one that is on the screen. I don't know whether your screen is the screen has frozen.
Yeah, it's gold. We're looking at gold. Can you see my cursor? I don't think you can.
Not yet. Please move your cursor. Yes, it's okay now.
Great. So So when I mean, what do you call them? So for a setup like this one, so you are in a buy, and then because this market is in consolidation, you notice that it will sweep liquidity, take out some lows before continuing with the main trend. So what you do, you don't close one order. I'm not closing this order because maybe I've set maybe my risk at 0.2%. Because if you look at those trades, most of them reach my stop loss at the 120, for example, because I'm still expecting this bullish move. Then I catch this move. Yeah. Then I'm also in the buy here and a new buy here. So what I find myself doing is, yes, I was in some drawdown, but I'm not yet taken out. The market has not broken structure, but I've taken advantage of a new move here, a new move here, a new move here, and the main move continues. Okay. So that comes again with time. Yeah. It comes with time. Yeah, that is why you can see sales and buys in the same time.
I was seeing sales and buys at the same time on the same commodity, and saying, is this not what everyone says you should not do? And our mentor is doing it.
Everything has mitigation. So when you, and this is something that even, like I was mentioning, big banks do. So you're in a clean break. So when you're in a clean break, there is a low probability that the market will take out this low. Okay. So even when the market is consolidating and giving you setups, and these are small setups, notice the take profits on that are like 200, yeah, 165, $300. Then the main move was maybe that $700 move, and then there's a 60. You know, these are mitigation trades. Okay, they're not necessary, and as I was explaining to Joe right now, they cost. Every trade has a $20 commission. Yeah, they are costly. So some of them don't work, some of them work, and this only applies when you're in a consolidation. And that is why I was telling you guys, even after a whole week of trading, yeah, there was nothing much to show for it because the consolidations took out the profits. Yeah. So at times you'll do that, at times you will just wait for one setup. They come in levels, and at times you'll have a very good week where just one trade earns you money for the whole week, like yesterday's trade. And then there are times when it will not.
Yeah, I also realized in the screenshot there was one trade that went almost to a loss of $1,000. I may have wanted to know what happened there. Was it over risking?
That was a 1%.
What was happening?
That was a 1%. That's called a 1% risk. So maximum risk per trade is $1,000. Okay, that's for a $100,000 account. Yeah. Okay, so the $940 trade.
Come again. Maximum?
A maximum of 1%. So what is 1% of $100,000?
Is it for a challenge account?
Yeah, this is for what do you call it? Yeah, it's a challenge account. Yani, it is a prop firm account. So what is 1% of $100,000?
Okay, it's 1,000.
Yes. So that's the maximum risk on a trade I can take.
My question now, my question is, it may have sounded stupid, but I wanted that clarification.
No, it's not. It's not. It is not a stupid. It is not a stupid question. A valid question.
Yes, because I want to now flip that question. When people are having funded accounts, like if it is a $100,000 account, the word around, because I've not been into challenge accounts, the word around is that there is that maximum daily drawdown, which is around 5%, I believe.
Yes.
Which is $5,000. How much is it for a 100,000 account?
$5,000.
$5,000. So they take. You are supposed to risk. The word around is you are supposed to risk 1 to 2% of the daily drawdown. So when you talk of 1%, for you are talking of 1% of the total capital, not 1% of the daily drawdown.
Yes.
Am I correct?
And that's the maximum you risk per day.
Now I get you.
So that
I get you.
If you have
when you usually say 1%, I usually take 1% of what the other guys say. So if it's like 5,000, 1% is $50.
Yeah, that then it will take you a year to complete.
Yes, that is. You see now why I'm asking what happened. You lost all that money. You now understand why I was.
Yeah.
That's why I'm asking.
Totally
was it over risking, or why would you go losing like almost 1,000 when 1% is 50?
Exactly, I understand.
You understand now where I'm coming from?
Yes, it does. I understand.
So you risk, for you when you talk of 1% of your account per day, it is 1% of the total capital.
Yes, because let me ask you,
Okay.
Let me ask you this question. If you're supposed to earn 8% for you to like finish one phase, and you only, and I insist this, you only risk $1,000 per trade per day if you're doing the challenge. Okay, once you finish the challenge and you are now funded, you only risk a maximum of 0.5% per day, so that you have 10 days before you can. No, you have 20 days, a whole month of losing before you can lose the whole account, which is impossible. Okay, you can't be losing every day. It means you buy where you're supposed to sell and sell where you're supposed to buy.
You know, actually, that is the reason why I've not taken such account, because I'm finding like when will you make this money?
Exactly.
So usually, when will you make this money?
Usually for Adesal, you will, if you're risking 1% per trade per day, per day, for example, you should take maximum of 2 weeks to finish a challenge. Okay, so that the other 2 weeks you're making money to earn to pay yourself. Okay, but if you risk 0.05%, then it will take you 80 days, earning 1%, earning 2R, 80 days to finish that challenge.
Now I get your point. Exactly. I get your point.
Exactly.
So that's why I've been reluctant.
Yeah. Please take a challenge. Please take a challenge. It is should not take you long.
And then do these guys really pay? Because even if you are risking that 0.5%, 0.5% of 100,000, that's what?
It's $500. Yeah.
So if you do 1:2, you get say you get 3 trades in a week or 2 maximum. That is around $2,000 a week.
Yes.
Considering there are 3 days, maybe you didn't get a setup, or there's a day where you made profit and it was taken out by another trade. So I'm talking about around 2,000. Do these guys pay?
Yes, they do. Yes, they do. Yes, they do. And if you can do this, just start with a smaller account. Take a $10,000 account.
Okay.
Go with a reputable company.
And you say
I'm sure they are
funding pips for now.
Yes, I'm sure there are a number of people here who have done the same. Non-reputable companies have taken our money. We know that, but the reputable companies actually do pay. If you go with funding, if they delay your payment for over 24 hours, they'll pay you an extra $1,000. Even if you're paying $10,
they'll do what?
They'll pay you an extra $1,000 if you delay your payment by more than 24 hours.
Funding pips?
No. Funded next.
Oh, funded next.
Yeah.
You mean those guys can wrap up $2,000, $3,000, $4,000 and they send to you?
Yes, they do.
Wow. I didn't know.
This guy
I usually think this is another Kafuri thing or something.
No. There's no Kafuri thing here. Another Kafuri thing.
Okay.
Anyway, guys, let me wrap this up. It's been 1 hour 40 minutes.
Okay, thank you so much.
Yeah. So if you guys have any other questions, prepare for tomorrow's webinar. And then we'll do them there.
And then when you fight something on NAS, you can show us how it happened or it is happening.
Okay. I will.
Okay, thank you so much.
All right, see you guys.
All right, bye.